morning. You've posted revenues in line while the mix in change in product mix has impacted your margins. Tell us a little bit about what the key drivers were for the quarter gone by and what held you back.
Well, I think for the year, first I cover for the year. And I would like to congratulate our shareholders for the highest sales ever, which we recorded in this year, and the highest profits ever that Cummins in India has recorded. So, having said that, as we gave you guidance for this quarter, we did say our export sales would be depressed. And domestic sales continued exactly as per what we had indicated. And at 992 crores, it represents an increase of 22%. Our exports, however, declined, which is exactly in line with our guidance. Profits came in at 209 crores, flat to last year. Now, within our domestic business, which we continue projecting to be growing well, the infrastructure segments, primarily construction, rail, these have kept up to our expectations and have given us returns in line with our investments that we've made in these sectors. So that's really been the success story of our domestic business.
Right. Your company is guided for a 10 to 15% growth in domestic sales. What makes you so positive about the growth for domestic business, and do the underlying demand conditions remain positive?
On the domestic business, as I just told you, investments being made by the government in rail, road construction, they're in fact expected to go up. Our power gen business continues doing well in India, both on the low horsepower and on the high horsepower front. So our guidance remains between 10% and 15% growth for the year. We do not go quarter by quarter, but certainly for the year, we are confident of delivering on our judgment.
Okay, in the export market, a clear trend is yet to emerge on account of prevailing uncertainties in various economies through the world. So, for how long do you see the export business under pressure, and what about the impact of the rupee appreciating as well?
The export business is actually a mixed bag. As we look out, there are various macro variables operating in these markets. In Europe, the extent of confusion now prevail based on the Brexit developments, and that's really been holding back their reason for almost 2 years now. The African economies have slowed down, and so it's a different set of variables operating there. So, again, currency strengthening for those economies may not be such good news. And they have payment problems and debt problems and refinancing problems of their own. So exports right now is mired with variables, different parts of the world, but it is not something that we can be optimistic about.
Sure. Now the company continues to launch new products mainly in the domestic power gen segment to address the rising competitive intensity. Tell us about your plans to strengthen the entire product range by doing small capex undertakings.
That's ongoing. We certainly provide value to our customers. There are segments which we look at carefully and understand how we could be more valuable to a customer, which is the customer therefore has specific needs that we address through continuing product developments. So these are low capex developments and however very useful to specific customer segments. That will continue, and that's actually one of the strengths of our 15% growth in the power gen business.
Right, Rajiv, analysts are also modeling in a revenue growth of 12 to 14% for your domestic and 3 to 5% for the export business. over FY19 to 21 and margin expansion of about 40 bips. Can you give us a sense of how do you see growth shaping up in the long haul?
Domestic, most certainly, we have given a commitment of between 10 and 15% revenue growth for the year, which, as I described above, we are confident of delivering. On exports, there's just too many moving pieces at this stage to be confident of registering a positive momentum in exports. Exports, our guidance has been flat to maybe even a small decline. That's because it's just various parts of the world being impacted by various developments, and some of which at this stage cannot be foreseen. So the export guidance is something where I have to stay firm with what we have given. Margin expansions, as I just told you, as the year progresses, it will be clearer to us, but for now, I'd stay with flat.
Okay, Rajiv, great to have you on the show and discuss your earnings. Thanks so much for taking the time out.